Good afternoon to everyone who are participating here in the office, as well as those in Shanghai, to this interchamber SME working group meeting that the EU SME Center is organizing in collaboration with the European Chamber of Commerce in China. And also to those who are participating today's working group meeting online. First of all, I would like to start with some opening remarks with the introduction of the EU SME Center. My name is Liam. I'm the operations manager of EU SME Center. We are a European founded project starting from 2010. This is our 10th year in China, and together with the European Chamber of Commerce, we organize a series of interchamber working group meetings. And today's meeting, we are going to focus on an interesting topic, which many of you might be interested in, beyond the capital's challenges and opportunities outside of the capital, outside of tier 1 cities. Today we have three very experienced speakers. Who are two of them joining me here at the conference room, and with one of them joining online. Carl Freeman from Desenshira and Associates, Mark Xu and Ben Rotham from China-Britain Business Councils, who is also an implementing partner of the EU SME Center. Without further ado, I would like to already give the floor to our first speaker, Kyle.
Okay, thanks, Liam, and thanks for having me. So for my presentation, I think we'll limit the presentations to roughly 30 minutes, and then we'll have a Q&A afterwards. So for my presentation, I'm going to break it down into 4 sections. The first section will be just kind of defining city tiers. What are they? The second section will be opportunities and factors in the development of city tiers. Then entry models, and then finally, if companies are looking to enter into non-first tier cities, how they may choose a location. Okay, so city tiers. The city tiers are terms that we use quite frequently. We refer to first tier cities, second tier cities, third tier cities. However, there's no official government guidance or actually official stance in any context about what city tiers are and what the definitions are. So these are pretty loose terms that we're using here, and some people may have differences of opinions about what cities fall in which tiers. However, even though they're loose terms, they are advantageous in helping to differentiate different types of cities. They help us differentiate different types of cities and markets in these cities, such as consumer behavior, income levels, business opportunities, ease of doing business, and cost in these cities. So I've taken actually a metric from another organization, SCMP. And these are commonly used criteria. So the SCMP criteria that we have on the screen here, population, the GDP, and the administrative divisions of these cities is something you'll see in a lot of organizations' metrics that they use to define city tiers. And just to take a look at how SCMP has done it, we have a list of specifically how they've delineated these. So this is SCMP's criteria about how they delineate the city tiers and how they've split them into first tier, second tier, third tier, and fourth tier cities. Again, they've done it based on political administration, population, and also the GDP of these cities. And so as these cities grow or shift, you can update these metrics or move cities around. And then at the bottom of your screen, we've just given some examples about different examples here. But again, these are pretty flexible terms. So some organizations may have a wider scope of tier 1 cities, or you may hear some organizations use tier 1.5 cities or tier 2.5 cities. So again, the city tiers are quite loose terms. And again, this is just a map of how SCMP has broken it down into these different tiers. You can look at the different regions and see where they're located. And also, I think this is helpful in looking at the city tiers because you can see that oftentimes there are different types of tiers grouped around each other in various locations. Yeah, so what is driving the development, and why are we talking about this subject today? What is driving the development of lower tier cities? These lower tier cities actually are being driven by the development of basically a few factors. So one is regional planning. When we're talking about regional planning, we're talking about the planning of infrastructure in various areas. Advantageous government policies that may encourage industry clusters, and actually industry relocation or consolidation in different areas. We're also talking about population controls and population planning. So looking to implement various limits on large tier cities as far as population, but also looking to encourage rural to urban migration into second and third tier cities via more flexible household registration policies. And finally, increasing standards of living as far as in lower tier cities. So in lower tier cities, we're seeing a dramatic rise in per capita incomes. We're seeing a lower cost of living than in first tier cities or second tier cities. We're seeing greater access to public welfare services. So again, that goes back to the population planning that I mentioned earlier. If you can't register for a hukou in certain first tier cities, you may have trouble accessing certain public welfare services. But in lower tier cities, you potentially can register for hukous and have access to those public welfare services. And just via surveys, a generally noted higher standard of living or quality of life that people are reporting in lower tier cities as compared to first tier cities. So I think I'm missing some graphics here on my slide, so apologies for that. Right, so what are these factors doing to industries and migration in China? Well, the resulting development trends are we're seeing basically the development of mega regions in China. So the Chinese government, the central government has designated certain regions as mega regions. There are 4 specifically designated mega regions that China is looking to develop, and there's 15 other ones that are planned. So the 4 that are currently designated, you're probably familiar with most of these. There's the Greater Bay Area, there's the Yangtze River Delta, there's Jingjiangji for those of us here in Beijing. And then the last one is the Chengdu region. That's Chengdu and Chongqing and about 12 other cities in and around that region. We're also seeing the development of various industries in different locations and industry planning. So basically what's happening, or basically the shifting of industries. So non-core industries and functions are being pushed outside of large cities, especially in manufacturing. We're seeing that licenses are potentially not being renewed, and companies in potentially high polluting industries are being encouraged to move outside of large population zones. And finally, we're seeing a change in migration patterns. So rural to urban migration is obviously a big story of China's economic development. Currently about 1% of China's rural population migrates to urban areas per year. We're seeing a shift in the rural to urban migration, and that this migration pattern is shifting and not so much focusing on first tier cities, but these migrants are moving into lower tier cities. And we're expecting this to develop more in the next few years. This creates a condition where we're seeing dispersed skilled labor force and also dispersed consumers. So what are the factors that are influencing potential market entry for companies? Well, these are similar to the conditions that I mentioned earlier. So obviously there's a growing market opportunity for a number of companies. So if you're in retail or B2C area, this is a fast growing segment in lower tier cities. It's expected that much of the consumer growth in China will be led from lower tier cities in the coming years. But I think something that's not promoted so much is as a lot of companies are moving into these lower tier cities, there's a growing B2B market as well. Another factor that's influencing companies' moves to lower tier cities is cost. So land and labor costs in higher tier cities have increased considerably in recent years, but they've remained actually comparatively cheaper and also stable in lower tier cities during the same period. And also the availability of skilled labor, as I mentioned earlier, is growing in lower tier cities. And just to hear some data on the increasing consumer base, so we're seeing rising incomes on the left there in lower tier cities. They're growing a lot more rapidly than they are in first tier cities. So we're seeing that lower tier cities are now about at what first tier cities or higher tier cities were 5 years ago. And then also we're seeing that the expected household consumption rates in lower tier cities will far outpace the growth in those consumption rates will far outpace higher tier cities over about the next 10 years. And then here, just some cost indicators. So on the left-hand side, we have labor costs. We can see that, or land costs, sorry. We can see that we've taken a few sample cities, and the Beijing land costs have grown dramatically. Also, you can see the Shanghai land costs have grown dramatically, but you can see in the other cities in the sample, they've been relatively more stable. On the right-hand side, you'll see some labor cost indicators, but also we see these indicators in lower tier cities also being more stable as far as labor costs. Something that is also advantageous to companies in lower tier cities is that the social insurance cost in lower tier cities is usually a little bit cheaper as far as the caps than they are in higher tier cities. So again, just a few more factors influencing market entry. Again, I think we're missing some parts here on these slides, but a more favorable regulatory conditions as far as companies that are potentially doing manufacturing or trading in high polluting industries or dangerous goods. They may find that licensing and inspections are more flexible or more favorable to them in lower tier cities. Also, zones and local governments may offer certain incentives and opportunities, which I believe our next presentation will discuss in a little bit more detail. And also authorities in lower tier cities may be more supportive of certain industries that they are looking to develop in that region. And finally, corporate restructuring might necessitate that companies enter into lower tier cities if they're engaging in, say, a change of business scope, M&A integration, or changes in certain internal departments. And just to note on the favorable operational and regulatory conditions, so you may face reduced barriers to entry in lower tier cities. You may find more favorable regional planning, such as industry clusters, infrastructure or resource access, and also investment incentives, such as those offered in development zones, those that might be offered by local governments, or there's also investment incentives in Western regions. And then on the right-hand side of your screen, we've actually tracked some of the factory closures that took place in 2016 and 2017. There was a large kind of crackdown on high polluting industries, and you can see that the darker areas were areas that were had more factory closures, We saw a number of companies moving into lower tier cities from these more populated areas that are in dark. Yeah. Sorry about this, just 1 minute, having some technical difficulties. Right, so for companies that are looking to capitalize on some of these factors, what are the common market entry models? This is just a really simplified breakdown of potential models, but for trading companies, I think they have a lot of flexibility in how they may enter these markets. They may choose to conduct trade without a local presence via, say, cross-border e-commerce, or even domestic trading without having a local entity in those areas. Or they may choose to set up a local entity as a trading entity, or even as a sales and promotion office. For companies that are looking to have a local entity, foreign companies may choose to have a direct entry into these markets. We see a growing number of companies, not just in manufacturing, but also in trading, looking to directly enter into second-tier markets because they see market opportunities for consumers in these markets and face less competition in these markets. Companies that are either looking to maintain a presence in a first-tier city during their market entry, or are already located in China, or are looking to expand into second-tier cities or lower-tier cities, can consider setting up branch office or subsidiaries in these regions, or a company may choose to actually fully move their operations. So this last option, we're seeing a lot of manufacturing companies or trading companies that handle dangerous goods, choosing to relocate fully to lower tier cities. So I don't think we have enough time to go through all of these in detail today, but I've added an appendix to the presentation, which will be emailed later, and then detail some of these market entry options further. So companies that are looking to move into lower tier cities, I think something that should be noted is that the ease of doing business in cities in China varies widely. So you'll see that the cities with the highest scores are the ones that we mentioned earlier as far as first tier cities. And then when we get out of first tier cities, we see that the ease of business drops considerably. In this metric, we see it drops almost 10%. And as you move further outside of these cities, actually this is about the top 25 cities as far as ease of doing business. And we can see that it's dropped about 100 basis points within the top 25. So there is a wide range of the ease of doing business as far as in these different locations. So what are some of the challenges that would have a city ranked lower in the ease of doing business? Well, based on experience, I see a number of factors here. So as far as legal issues that may be difficult in lower tier cities, we see registration and licensing and especially administrative delays in these procedures. Also, there's uneven implementation of regulations. We see them maybe implemented a bit more evenly in higher tier cities, but a little bit less evenly in lower tier cities. And there's also concerns about settlement of legal disputes if those are to be settled locally in lower tier cities. But again, there's ways to structure around those legal disputes. As far as banking, this title maybe, I don't want to blame the banks necessarily. This is more of a foreign exchange issue here. So oftentimes the foreign exchange payments and settlements are handled at your bank, but really the State Administration of Foreign Exchanges is handling these issues. And oftentimes for cross-border transactions or foreign exchange settlements, local authorities may not be as experienced with these, and these can cause issues. especially for injecting capital or financing in cross-border situations, where companies have constructual arrangement or contractual arrangements that might be quite complex and go across borders. These can be difficult, and also as far as repatriation of profit, if authorities are not experienced in these areas, it can cause difficulties and delays. And again, on the tax and financial side, cross-border, we see difficulty with tax authorities in settling withholding taxes. This can be the case where a company has maybe mixed services and goods within a contract, and they need different levels of withholding taxes. We also see an issue with higher levels of fraud in lower tier cities in some cases, and also cash flow management if you have an extensive structure across China.
To share the new one. Share.
Right, so apologies about that, but thank you for the message and updating us on that technical issue again. So I think we should be on the right side now. And then finally, for companies looking to choose a location, where should they locate? And I think our next presenter, CBBC, will talk about this in a little bit more detail. And I know they have a new report that is quite helpful in this regard. But just to talk about a few areas, China has 21 free trade zones. So companies may look to capitalize on these free trade zones. They offer certain incentives, more liberalized market entry requirements for certain sectors, maybe reduced tax rates in certain cases, and more expedited administrative procedures. Companies can also look at industrial parks or certain zones. There's quite a number of industrial parks and zones if you break them down by type. I'm not going to do that in this presentation today, but again, I've added in an appendix with what these types of parks or zones are. Really, I would say that these zones are looking to focus on promoting certain industries and not necessarily looking to specifically attract foreign investment. So approaching these industrial parks or zones by industries and knowing what industries they're looking to recruit is quite helpful. And they have a number of preferential policies. Oftentimes these preferential policies are more of a case-by-case basis, and you may not be able to search them on the internet. Also, companies might look at entering into an area that has an industry cluster in their specific industry to benefit from local conditions, such as supply chain advantages and other issues. And finally, where to locate. Again, there's three other areas I would like to highlight. New and promising markets. So we mentioned the growth in consumers. Here we have some additional data here. We're expected to see growth in consumers increase by 3% or grow 3 times from its current rate till 2030. They account for about 78% of the incremental growth. Also, you have a growing population with income, and also a number of other factors that are leading to the growth in specific markets. Obviously, if you're looking to enter into these markets, you should really kind of break it down on industry basis or a product basis and explore it a little bit more. Again, areas with more favorable regulatory conditions, so companies that are potentially doing manufacturing, or trade in certain goods that may have be deemed as high pollution manufacturing or high polluting goods. They could potentially relocate into areas that may grant them more favorable licensing or environmental inspections that would allow them to continue to operate or operate in a more expanded manner. And then finally, in inland and Western China, there are certain benefits there as well. So there in China's Western regions, there is a policy that grants companies a reduced corporate income tax of 15%. That's down from the standard corporate income tax of 25%. So for qualifying investors investing in those regions, they may receive a reduced corporate income tax. And there's also a central circular that allows governments and these local governments in these regions to have greater flexibility in setting policies as far as incentives or preferential policies. And again, these regions may also offer lower cost. And then finally, if companies are considering relocations, this is kind of just a thematic breakdown of how we're helping companies look at various locations. So on the left-hand side of your screen, you'll see metrics that we use as far as setting the criteria for comparison of different locations when companies are looking to move. And on the right-hand side of your screen is kind of a life cycle of what this location search would be. So on the left-hand side of your screen, you'll see that we're looking at cost metrics on a number of in a number of different areas. We're looking at potential supply chain metrics, connectivity as far as infrastructure metrics, workforce metrics, legal and regulatory metrics, which was an issue that we were mentioning earlier, and also various incentives that may be offered in different areas. And as far as how we're doing this, we're looking at, first setting the metrics and then kind of deep diving into various locations, creating a large list and then a shorter list, and then also doing site visits and site due diligence to make sure these metrics line up with the expectations of companies. And with that, I am at the end of my presentation, and I will hand over to our next presenters.
Thank you, Carl. Thank you very much for your presentation. And as indeed Carl has mentioned, in the end of Carl's presentation, there's also appendixes that explains some of the matters in more details, where by the end of this working group meeting, we are going to share with the attendants. Moving forward, indeed, as Carl has already introduced, one of the reasons why from the EU SME Center and the European Chamber we selected this topic for today's webinar is that being one of the focuses of the EU SME Center in the new phase, in the third phase of our project, together with our partners, we would like to start exploring the opportunities outside of the first-tier cities where the competition is fierce. Earlier this year, it was end of last year, we have already organized together with CBBC a seminar on the Beijing pilot-free zones, if I remember correctly, Mark. And then also earlier last year, we have also looked into the opportunities for industrial wastewater management policies in West China, in Chengdu, Sichuan province, also together with CBBC. Having said that, CBBC has also a lot of experience dealing with local governments, presenting the opportunities from more than just second and third tier cities, but also the strategic developments of China's on development zones, on free trade zones, and also on high-tech industrial zones. Without further ado, I will pass on the microphone to my colleagues at CBBC, Mark and Ben. Mark, the floor is yours. Sorry, Ben, please, you can start first.
Yes, I will be starting first. Can you hear me, first of all? Let's get that out of the way.
Yes, loud and clear.
Good. Okay, I'm based in Shanghai, so do just shout if you can't hear me. Right, well, thank you, Liam, first of all, for that very warm introduction to our work at CBBC. And thank you, Kyle, for that in-depth presentation as well. Good afternoon, everyone, or based in Europe, good morning, I suppose. My colleague Mark Xu and I from the China-Britain Business Council are going to be talking about how to succeed within China's strategic regional development areas and various types of zone as well. Why are we talking about these strategic regional development areas? Why are we talking about zones? Well, the simple answer to that is that they do contain a lot of non-first tier city. And more than that, they help to link up these non-first tier cities with first tier cities and to help them link up with each other as well, take advantage of each other. We're going to start in our half an hour or so with a very brief review of the city tiers, although obviously Kyle has just covered that very comprehensively, so we're going to be a bit quick with that bit. We're then actually going to go on to look at those strategical regional development areas and the different types of zone. Then we're going to provide some case studies of companies, particularly some small and medium-sized enterprises, actually operating within some of these zones at the moment to see what their experience was. And we're going to finish off with some general advice, which will hopefully complement Kyle's. We can go back a slide, actually. We can go on to slide 2 if you'd like. There we go. Sorry, directing this remotely, but yeah, I'll say next slide when we're moving on. Thank you for doing that. No, slide 2, up one. There we go. Okay, as Kyle said, any definition of China's tiers is not official. He was talking largely there about 4 tiers. We've got here 5 tiers. You can read definitions from various places, predominantly financial publications, which have varying numbers of tiers, including those half tiers that Kyle mentioned there. And sometimes a bit of variance in the cities that are found in each tier. But of course, generally, you're going to find at the top end cities like Shanghai, you can see there, first tier city, down towards the bottom, a city like, say, I believe that in our 5th tier city picture there is Dezhou in Shandong. Okay, and of course, as Kyle said, those tiers are defined by things like GDP, population, political structure, as well as perhaps some more, shall we say, abstract concepts like resource concentration. Right, let's move down to the next slide, shall we? There we go. This table, which may look somewhat familiar from the presentation that you've just seen. So yeah, just to reiterate there, as you move down the tiers, you're generally looking at smaller cities, perhaps less quote unquote internationalized cities, cities with lower GDPs. I won't talk about the tiered cities in more detail because Kyle's just told you everything you need to know there. Instead, we will move on to the next slide. And that's again the advantages of different tiered cities. So we'll move on to the slide after that and actually get onto the new content, shall we? There we go. So now we've got that very quick recap done of the different tiers. Let's talk about those strategical regional development areas and those zones. And we're going to start, I think, with talking about strategic regional development areas, rather long title. These are larger than provinces, and their ultimate goal, their meta goal, if you will, is to integrate these cities across the provinces. Based on certain economic guidance, based on certain defined priorities, so as to give play to the various local advantages in a complementary fashion. I suppose looking at it from our perspective today, from the theme of this seminar of moving beyond the first tier cities, they are relevant because, as we said earlier, they are linking up those major cities in China with those somewhat less major cities, also important cities. And I'd like on this slide to just cover those 4 key strategic regional development areas. See them listed there. I'll talk about them in a bit more detail now, just to explain them a bit more. The first one there is Jing, which is home to about 8% of the Chinese population. Quite a few of them have probably gone home this year for Spring Festival already, so maybe a little less than 8% now. And about 10% of the Chinese economy. It's a little newer than some of the other strategic regional development areas, in that it was announced in 2015, and it exists to push the integration of those 3 areas: Beijing, which is the Jing, Tianjin, which is the Jin, and Hebei province, which puts the Ji into the Jingjinji there. So how do these areas contrast and how do they complement each other? Well, I mean, Beijing's economy, as those of you in this seminar who are based in Beijing obviously know, is predominantly based on, say, private partnerships, technological entrepreneurship, cultural industries, and of course a good helping of financial management, insurance industry, that sort of thing. Moving on to Tianjin, you've also got significant financial services there, alongside high-tech industries, and of course transportation plays a very major part in the Tianjin economy, what with it being a major port. The third part of Jingjinji, Hebei, is unlike really Beijing and Tianjin. It is a traditional heartland for heavy industry. In particular, it is, of course, synonymous with steel production in China. Although with the advent, somewhat before the advent as well, but with the advent of Jingjinji, it's moving much more towards perhaps cleaner industries, more high-tech industries. I'm thinking here of NEVs, I'm thinking here of pharmaceuticals. And finally, when talking about Jingjinji, it is always important to mention Xiong'an New Area, which was created pretty recently in 2017 to take away some of the functions that Beijing has as a capital city that don't need to be physically located there. So a government administration, university campuses, Beijing being a traditional hub of learning in China. So yeah, that's the first of our strategic regional development areas there, Jingjinji. Let's move on to another one now, the second on the list, which is the Yangtze River Delta, which, as the name suggests, is based in the Yangtze River Delta. I mean, it's the Yangtze River Delta centered on Shanghai, has long been one of China's primary engines of growth, contributing about more than 20% of the country's GDP last couple of decades or so, and about a third or so, a bit more, of China's imports and exports are passing through the Yangtze River Delta. As I say, Shanghai being China's largest city, a worldwide megalopolis, the Yangtze River Delta is centered on Shanghai, but also includes other key, say, second and third tier cities, as we're talking about today, and a smattering of fourth tier cities, like Hangzhou, like Nanjing, like Suzhou, like Ningbo, like Hefei, like Wuxi. Those cities are, of course, all based in Jiangsu province, Zhejiang province, and Anhui province. Indeed, the Yangtze River Delta covers those 3 provinces, although only Anhui in part. Yeah. Okay, to just say, pick up a couple of those cities, apart from Shanghai that I've mentioned there, they of course all have their own specialities. Hangzhou, we're looking at, say, IT services and the creative industries. Hefei, we're looking at, say, the manufacturing of household appliances and machinery. Hefei being based in Anhui province, where labour is significantly cheaper than the rest of the Yangtze River Delta. Now, the next of these areas I'm going to just talk about briefly is actually the fourth one, not the third one, because it kind of links to the second one. The Yangtze River Economic Belt, which is split into 3 regions, like a river, a lower region, a middle region, and an upper region. The lower region is largely centered around the Yangtze River Delta. We just talked about that. The middle region centered around Wuhan. The upper region centered around Chengdu and Chongqing. So that is actually that Chengdu region that Kyle mentioned before. As with these other areas, the Yangtze River Economic Belt is aiming for a large-scale integration, in particular to spread the wealth from China's coast around the Yangtze River Delta inland into those major second, third, fourth tier cities along the Yangtze River. Together, it covers a good 50% of the Chinese population. Finally, let's talk about the Greater Bay Area, which is 9 cities within Guangdong province, which together cover the vast majority of the province's GDP. Not quite all of it. There are a couple of cities in Guangdong that aren't in the GBA, along with China's 2 special administrative regions, Hong Kong and Macau. And really, the Greater Bay Area exists to deepen, strengthen cooperation between these 9 cities in Guangdong and the 2 special administrative regions of Hong Kong and Macau. I've talked quite a lot about this slide, actually, so without further ado, let's move on to some quicker slides, shall we? Shall we go on to the next slide? There we go. Okay, so from a concept that's bigger than the provinces to one that's actually smaller than the provinces, we're going to talk about zones now. Some zones in China are local, some are national. And when we're talking today, we're kind of focusing on the national ones. So when we give any numbers for any amounts of zones, we're talking here about the national level zones. I just want to clarify that, because you'll see various statistics bandied around when talking about zones. And again, these are relevant when we're talking about the parts of China outside of first-tier cities because, well, most of these zones are based outside of first-tier cities. And split up the zones here into 5 very broad categories, and we're going to focus on a couple of them in particular. I have just named them here: pilot free trade zones, economic and technological development zones, high-tech industrial development zones, border economic cooperation zones, and special customs administrative zones. I am aware of time, and we would like to focus specifically on those pilot free trade zones and those economic and technological development zones specifically. So in the interests of making sure you've all got plenty of time to ask questions, shall we move on to the next slide? There we go. And I'm going to talk about pilot free trade zones here. Do note the pilot in the name. They are technically still in their pilot phase. So we do tend to refer to them as pilot free trade zones. You can see this map here. Where are these national level pilot free trade zones based? Well, largely in the east and I suppose to some extent towards the south so far. And they exist. They are free trade zones, so they exist to be free trade zones. But they exist to emphasize those trade links with other countries and, of course, to promote the cross-border use of the renminbi in international trade. You can see a map here. Don't be confused, don't be misled here. These national level pilot free trade zones are named after provinces, but they do not cover the entire province. They are just named after the provinces. That's worth mentioning because I'm going to come on to something in a few minutes where that is actually relevant. And you can see here that originally there were 11 pilot free trade zones. Back in 2019, 6 more new ones were established. Then in 2020, 3 further new ones were established, plus an extension to the Zhejiang pilot free trade zone. This means that there are now, well, if your maths is okay, you can do 11 plus 6 plus 9, that's 20, I've said here there are 20+1 pilot free trade zones. I'll come on to that as why there are 20+1 in a minute, but short answer, Hainan. But before we talk about Hainan, let's move on to the next slide. Okay, so pilot free trade zones are going to offer a range of policies which foreign companies looking to locate there might be particularly interested in. I've listed here just some of the more common ones. At CBBC, we've written reports about this in the past and looked at long lists for many different pilot free trade zones. You tend to see certain policies cropping up again and again. I'm thinking VAT exemption, income tax reduction. I'm thinking, to name a few on this slide, relaxed restrictions on foreign ownership, financial incentives for foreign funded enterprises, like many of the people in this call today. Although, of course, there are conditions that come with those financial incentives, whether it is being based in a certain industry, whether it is locating your headquarters within the pilot free trade zone, or whether it is investing a certain amount of FDI. It is also worth mentioning when talking about all these policies do vary from zone to zone. It's not as if pilot free trade zones across China have to follow a specific set of advantages, a specific set of policies. And indeed, even within a zone, as Kyle mentioned, these policies can be quite long, quite dense. So you might even find there is room for negotiation. There is room for a bit of discussion in terms of what the zone might be able to offer you. Let's move on to the next slide, shall we? So there are 20+1 of these zones. The +1 is Hainan, which is not actually a pilot free trade zone. In the long term, it's not even a zone. It is a free trade port as per a strategy that was revealed just last year. What this means is that, unlike those other pilot free trade zones, Hainan Free Trade Port covers the entirety of the island province of Hainan, and it's received a lot of support from the National Development and Reform Commission so far, based on that plan announced just last year, including 3.5 billion renminbi of infrastructure and public service support. So that's what, how much is that in dollars, in euros? About what, 450, 500 million dollars? 500 euros rather, and there are various investment projects already going on within Hainan. What is the long-term plan for Hainan? What is Hainan Free Trade Port? Well, we've covered that on the next slide. There we go. So there is a timeline to describe the long-term development of Hainan Free Trade Port. At the moment, it's operating as a free trade zone. It's looking in the next few years to become a fully fledged free trade port. Beyond that, to establish itself as a world-leading free trade port, and then nationally renowned world-leading free trade port through various steps, including simplification of vessel registration, including the simplification of the tax system vis-a-vis large parts of China, and including offering a competitive business environment, and then movement of transportation labour, and specifically with Hainan data. And well, that is everything I'm going to cover on my side. My colleague Mark is going to continue, and then we will be ready for the discussion. So Mark, I'll hand over to you.
Hello, thanks Ben. Can everyone hear me? Yes. I see sound is overlapping. Hello.
I can hear you, Mark, so I assume it's okay.
It's okay. So I'll carry on. I'll carry on. I think this is linked to the webinar rather than everyone in the room. But thanks, Ben. Hi, everyone. I'm Mark from the China-Britain Business Council, and I look after the advanced manufacturing and transport sector. So we deal a lot with these free trade zones, economic development zones. So that's why it's our interest to write this couple of reports introducing the various zones in China. So next page, please. To start with today, I'm going to briefly introduce the economic and technological development zones. A lot of these topics being covered by our previous two presenters. I'm going to share a few case studies of our member companies who's been established in these zones, and finally finish off with some advice for any potential new entrants into China. So just briefly, a quick look at the history of the ETZs. To speak about the economic and technology development zones, we have to really start with the special economic zones started back in the 1970s in the time of Deng Xiaoping. So people always remember Shenzhen, but back in the 1970s, there were actually 4 special economic zones: Shenzhen, Zhuhai, Shantou, and Xiamen, all based in the south of China. Some of them obviously more successful than the others. These were first created after the introduction of China's open door policy. And due to the success of these special economic zones, the Chinese government then created the ETDZs in 1984, when the open door policy was expanded to include more Chinese cities in order to attract more foreign direct investment into China and create knowledge-intensive and technology-intensive industry from the traditional labor-intensive industries and accelerate these regional economic growth. So looking at those figures, there's currently 219 ETDZs, 107 of them on the East Coast, 63 in the Central China regions, those 6 provinces, and 49 in the West. So next page, please. So with a total of 26, Jiangsu has the highest number of ETDZs, followed closely by Zhejiang and Shandong. Just to demonstrate the importance of these zones, in 2016, the GDP produced by just these 219 state or national level zones was 8.3 trillion, accounting for 11.2% of China's total GDP that year. In 2018, that rose to 9.9 trillion. And I'm sure in 2019, it broke over the 10 trillion mark, but we don't currently have those figures for the last year. So next page, please. ETDZ policies. The previous two speakers already mentioned a lot of these policies. So if you are a company coming to China and decide to set up in China, these zones will provide the most attractive in terms of benefits, incentives, subsidies, and depending on your industry and, like Ben said, your FDI investment values, possibly that there are even reduced tax, or even the whole of the tax for the first 3 to 4 to 5 years, even sometimes free rental for the first 5 years. So a lot of these policies are generally a guideline, and is done on a case-by-case basis. So it's good to get to know your local government, the Bureau of Commerce, the state and the local tax bureaus, your foreign affairs officers, and try to negotiate obviously the best policies possible. The next page. Just briefly touch on the high tech industrial development zones. Similar to the ETDZs, although the ETDZs are more focused on manufacturing industry, the high tech, obviously by the name, tends to focus on universities, research institutes, and the high tech industries. A lot of these policies, looking at it, is very, very similar. Although we're seeing more potential funding from these zones for any new startup R&D, entrepreneurs. So it's depending on your industry and type of company. There's different zones that will be suitable for yourselves. All right, next page. So moving on to a few case studies. So firstly, we have one of our members in the ICT industry, radio design, which is based in Xishan district of Wuxi. So they opened up in 2012. And the reason why they chose Xishan is obviously the local low rental costs, relatively mature supply chain, being in the south of Jiangsu province, local talent, and it's relatively proximity to Shanghai. Back then it was probably around an hour. These days, probably by the high-speed rail, half an hour you can get into Shanghai. So, well, they mentioned main challenges being capital investment. Obviously, with these subsidies and incentives, the local government do require the initial capital investment to be in place within kind of a 24-month period. You don't obviously have to input those cash all at once, but there is a set period where they expect that investment to come in. Logistical challenges they mentioned, they had prolonged waiting time of equipment. Obviously, Wuxi being still inland is not on the on the seaside, in a port. But looking at those ratings, Wuxi was ranked 11th. So technically speaking, their business environment should be relatively well established. Main legal and practical challenges, difficulty in recruiting and retaining skilled labor force. Again, this is what Carl mentioned about movement of labor from rural cities to the urban cities. But in the past couple of years, we've seen a reverse of that. A lot of the migrants into the first tier cities are now moving back to their homelands, mainly because of the higher cost of living at first tier cities, and secondly because of house prices, and they tend to find now more opportunities back in the lower tier cities. So next page, please. Modern Water, another one of our members in the environmental business. They produce wastewater solutions, and they established in Chongqing, which is a city in the north of Zhejiang province, in 2018. Not a lot of people probably heard of Chongqing. I would say, without going into it, probably around a fourth tier city. They mentioned back in 2018 when they first established there, they didn't even have a 5-star hotel. I'm sure things have changed now. The main reason why they set up there, obviously, is because their local partner is based there. So one of those reasons to setting up in different regions, obviously, where's your supply chain, where's your client base, where's your partners? These things are all, need to be considered. Favorable policies, because it's a relatively less developed city, they managed to obtain very good benefits from the local government. I think they had lease free for at least for the first 3 years, and it's being an hour again from Shanghai. They were able to proximity to their Shanghai headquarters. Main financial challenges the local zones requires. Again, this is the same issue with the first case study. The local government do tend to push hard for that initial investment capital to be in place as soon as possible. Legal and other challenges, like we mentioned, these left cities tend to have less, shall we say, experience in dealing with international organizations. Banking is one, HR. Sometimes we see, IP issues at these lower tier cities, but obviously things are improving steadily as they see more international companies located in their region. Next slide, please. RB beckons is a pretty large company. It's probably not a SME, shall we say. They're based in Qingdao. They established quite a long time ago, back in 1998. Obviously, they're in the FMCG business. They manufacture a lot of these goods, probably back then for export back to Europe and other Western countries rather than for the Chinese local market. So they requested a location which is being in a port city, access to investment. Like I said, a lot of these zones do have management organization or investment companies who possibly can invest into the business if they see there's potential. We're hearing Neil, who's located last year in Hefei, in Anhui. They managed to obtain something silly like 10 billion RMB of local investment from the local government. So there are, if you're coming to China looking either for partners or even investment, speak with your local zones. Possibly there will be funding available as well. All right, next page. Advice for setting up in China. Obviously, our audience today are probably mostly SMEs, and when they come to China, whether it's to have an office or a small workshop, factory, renting is probably their first choice. However, if anyone's been in China for the past 10 years, real estate prices have just gone through the roof. And for the majority of our members who's been here, who actually bought real estate, they managed to generate more profit from the real estate growth than their core business, shall we say. So if obviously, financially, if it's possible, do consider investing in the real estate compared with just renting. Benefits between zones. Well, without saying, do look around, see what offers you have. If you even considering Shanghai, there's around 20 different districts, each probably constant or focusing on different sectors. So if you're in the auto industry, you're looking at Jiading. Lingang's very well established now with Tesla coming in. Minhang's been a traditional manufacturing company. Now moving down to Qingpu, where's the tech, Huawei just moved in there as well. So do even if you've got a city in mind, do look around. These cities are pretty large, even outside the first tier cities, that is. Keep abreast of the latest rules and regulations. Like we mentioned, obviously, I think the negative list is still around, there's 40 odd. So apart from those legal and sensitive areas, the negative list is reducing year by year. And the business environment is improving. I think in 2018, China's ranked 78th around, and in 2020 it came down to the 46th. Yeah, so the business environment is improving in China. Next page. Do not look at regional differences when choosing. Obviously, China's a huge country. Always mention that. North China, South China. There's a lot of cultural differences in terms of taste, culture. So do look at where your potential market is. Obviously, this totally depends on the industry you are in. It's probably especially matters in the food and drink, the retail industries. Establish stable communication channels with regular authorities. Like I said, do keep a close contact with the local authorities. Registering a company tends to take between 2 to 3 months. But we have a member that just set up recently in Tianjin, in the Tianjin high-tech zone, and because they had that good relationship with the zone, with the local FAO, setup took only around 2 weeks. So do use that channel. The services are being improved consistently. Take into consideration of the inter-regional coordination developments. This is Jingjingji GBA, which Ben and Kyle mentioned. So I'm not going to further detail with that. So slightly overrun, and that's it for our presentation for today. And feel free to ask any questions.
Thank you very much, Mark and Ben, for your presentation. Moving on, we are going to have a question and answer session. I am not sure how are we collecting the questions.
People could raise their hand and unmute themselves, or they can send questions through the chat.
Okay, so just repeating what my colleague Esther just briefed me, there are two ways. Either by raising your hand, unmute yourself, and ask directly to the speakers, or you can also send your questions to the chat. While waiting for our questions from the audience, maybe then I kickstart with a question that I have myself. I would like to share, of course, we all have learned about the preferential policies, about the advantages and the opportunities potentially from these second, third tier cities. We all have also learned about the restrictions, the regulations, the regulatory barriers, and limitations on efficiency, for example, in these second, third tier cities. I would like to give also use the example that Mark used in your presentation about Modern Water, because I also know about this company pretty well. I personally myself engage more in the water sector. When it comes to the water sector, for example, companies need to work most of the times with a Chinese partner to establish a JV, and most of the times you need to rely on the local partner for government procurements of the projects. This is a very usual, this is a very common case. And this very much also decides on the fact that when selecting areas, when selecting cities or regions to work with for companies engaging in wastewater treatment, in the water sector in general, companies are very limited in their options. These are going to be regions alongside the Yangtze River, for example. So starting from West China, Chengdu, Chongqing, to Central China, Wuhan, Hubei province, and to as far as continue to Shanghai and Zhejiang province. This is a question to all the speakers then. How would you advise then companies when selecting with to work with local partners in, for example, these cases?
Ben, you're joining us remotely. Do you want to take the first shot at this that we can discuss in the room?
I'll let Mark. Mark works a lot more closely with our partners, our clients who do that. So I imagine his insight might be the best of the two of us there.
So the question is, how should you work with your local partners? I think.
Let me specify the question. Modern Water is succeeded by establishing a JV with a local partner.
Correct. And
they had issues. And how they tackle their issues. So I think this might be a question that applies for many of the cases for the companies.
Well, originally they set up a company in Shanghai, and obviously they built a relationship with their local partner, because the relationship was was of mutual benefit. They decided to set up a JV in Chongqing. So with a partner, if business is going well, there obviously isn't an issue. But obviously, if there are issues, well, they need to work out that issue with their partner. But at least they still have their Shanghai headquarters to fall back. Not all their China business is reliant on this one single partner in China. I think that's the whole point. Having over reliability on one Chinese partner, that could be risky. So you need to have other options and not totally reliant on your local partner in terms of BD and sales, because you'll be in total you're in their hands basically.
Yeah, I would just comment. I mean, I guess not specific to that company. given that I have not worked on the case with them. But just more broadly, when working with Chinese partners, I think one is setting up some type of precautionary measures or protection for your company. So oftentimes we're working with companies to build in protection of IP, talking with companies about, are they contributing IP as capital, or are they leasing IP, foreign IP to the domestic joint venture in China. Also, how is potentially IP that's developed locally within the joint venture, how is that treated as far as ownership and value? I would say also maybe another key point here is probably on the structural arrangements. If you're entering the market, I think you want to look at how the board is set up as far as ownership, and know what types of thresholds will allow you to make certain decisions within the company. So there's been changes to those under the foreign investment law that recently came out a few years ago. That's changed what was previously the joint venture law. So now companies have a little bit more flexibility as far as how they structure their boards, as far as voting rights, and also as far as injection of registered capital and equity ownership. I would also say due diligence. So we're talking about entering into lower tier cities. And I think in this case where the joint venture partner might be bringing local staff, local sites or resources. I think really knowing that you're doing that due diligence and knowing what you're getting and the valuation of that prior to entering into that joint venture is quite important, because oftentimes those resources that are contributed might be part of the capital investment of the local partner. And so that depends on their valuation as far as their capital contribution, and also affects the equity of the two partners. So I would say before setting that up, make sure you're doing some site due diligence on that as well.
No, I think Kyle answered most of what I was wondering, but I do have another question.
You can introduce yourself for the.
Charlotte Svensson from the European Chamber. What if you want to get out? Because this was all about getting in. But what if you actually set up in a zone and then you realize this doesn't work for me? Maybe I want to relocate somewhere else, or actually I just have to get out. Thoughts? What do you do? Because we do see this sometimes as well.
Yes. Can I go? Yep. Yeah. I did work for a company as well. We first established as a rep office, then decided it was obviously rep office, you can't do business, and we decided to set up a woofie. So the registration of the rep office took about a year. So it is possible, but is quite a lengthy process. Because you have to all the tax, everything's got to be in place. So with these zones, it's possible to move from one zone to another. It's best to obviously to close that business first, and then establish another company, rather than trying to relocate, because obviously the zones you're currently in tend not to be very happy and cooperative. Exactly. Close the existing company first, and then set up the other company.
Maybe I'll just add on to that. So I think maybe one more important point in that is probably companies knowing what they're getting into as far as zones before they're entering zones. So I think something that we see, especially as far as these free trade zones, is a lot of companies read things about free trade zones. They see free trade zones in the news, and they want to set up in a free trade zone. But really, their operations are pretty normal. There's no specific reason they need to be in the free trade zone. The free trade zone doesn't offer them any advantages, say like they're in a specialized industry, or they have certain shipping or logistics requirements. They're just setting up their free trade zones, which actually, as you mentioned, may in some cases cause difficulties for them. But I think companies should really educate themselves about why are they entering the zone before they do that. Also, you mentioned, maybe conditions change and they want to exit. So I would agree with the comments from Mark. there's different ways you can structure the relocation. Actually, I put a slide in my appendix about the tax and legal implications for restructuring. But one of the easiest ways to do it would be to set up a new enterprise and close the current enterprise. Obviously, if you're doing it like that, there's staff transfer and asset transfer issues. But if you could also potentially set it up as some type of merger to minimize the tax exposure there. So I think it really depends on what you're transferring or relocating as far as assets, staff, and other items.
Okay. Anything to add from your end, Ben?
No, that was very comprehensive.
Okay, then we also have a question or a comment.
Question. Just to follow the Leon's question just now. It's about how to figure out the right partner in the tier 3 or tier 4 cities. I think we have got a new approach, and you know, in Beijing, Shanghai, we have witnessed many some representative office by local government. They have their government office in Beijing and Shanghai, even in Shenzhen. But now, over the past years, they have, some of them, they separated 2 different departments. One is 100% local government related business. They just receive their delegations. They satisfy their officials. And the rest of the departments is about FDI or investment related. Now, you know, over the past years, we received many small and medium-sized companies from very small countries like Lithuania, like Estonia, or like Hungary. So they have no enough contact in local. So what we can do is to help them to connect with each other. And in my office, we have helped 3 tier 3 cities to set up office in office. We bring them into my office and we set up just like a soft landing room, soft landing pad, and we set up a community for the SMEs and the locals, tier 3, tier 4 cities government to meet together. I think that could be a very good approach for the companies, for the international companies to get in touch with the policymakers and some decision makers. That's the best way to figure out the right partner. Because
thank you very much for your comments.
Yeah, thank you.
I would like to then, because we have a time restraint, leave the floor for Q&A for our audience. So please unmute yourself, speak out if you have any questions to any of the speakers. And we have someone on the screen. Yes, please. William.
Yes. I'm William Spears, and I'm Spearhead China. And at the moment, I'm based in Xi'an, which is a second-tier city, according to everyone's estimates. Now, my question is, being an SME myself, I would like to ask the professionals, how would they encourage SMEs into the second-tier cities who don't necessarily have to be in a free zone? So the question is, how do you encourage SMEs into second-tier cities and third-tier cities?
To not go to free trade zones. To stay where you are and not going to free trade zones. Do I understand you correctly?
No, what I'm saying is, if you forget the free trade zones, because not every second-tier city or third-tier city has a free trade zone, how do you encourage SMEs into those cities?
Yeah, I think that's a good point. We talked about different kind of landing areas as far as zones. But again, as the point was made earlier, I don't know that all companies need to go into zones. And also, I think some of the issues around zones is companies may have the understanding that because it's a zone that might be managed at say, the central level or the provincial level, that it will have a certain level of services within that zone that they can offer, such as banking services may be equivalent to those in first-tier cities. In my experience, that's not always the case. So I think that's a good point that companies don't always need to go into zones to enter these cities. Oftentimes, zones may not offer them certain benefits like we were talking about as far as incentives or certain tax structuring, or they might not give them subsidies. In this case, if you're not getting certain benefits from zones, I don't know that it is really beneficial for the company to enter into zones. So I think that's a very good point that you're making, that not all companies need to go into zones, and there might be other locations in these cities that companies could look at, such as just establishing in the city center, the central part of the city, or looking at where other similar organizations, say your competitors or partners, are located. But I think you could probably help us with answering that question as well, given that you're located in China.
Interesting point. No, the point, why I raise that point is because there are many SMEs endeavoring to get into the market. They don't have the resources as such to, get professional advice all the time. And I'm okay, because I'm pretty established, obviously, in China. But it's the new ones coming in. Those are the ones I'm worried about. New guys who have the experience more than I have of actually encouraging SMEs into China. I'm just wondering if there's a magic bullet that you can see, or a magic bullet you create.
Hi, just take the free trade zone for an example. From my experience since the establishment of the Shanghai Free Trade Zone in 2013, I see there's only two types of business that actually should be located in the free trade zone. One is the trading companies, including the e-commerce sector. You are in the free trade zone because of the tax benefit. You don't pay any tax until the goods actually, you've sold the goods and the goods leaves the free trade zone. And the second one is any company that wish to utilize the local labor they call it the export processing zones. So if you would import raw materials, utilize the local labor force to manufacture, assemble, or work on the raw materials, then export out of the free trade zones, out of China. So you don't actually pay any tax when the goods or the raw materials land in these free trade zones. So it's only those two types of business that really should locate in the free trade zones. Otherwise, the cost of locating in the free trade zones is actually higher than the other types of zones.
Yeah, thank you.
If I may also add one point here is, again, the point that I was trying to raise earlier. The local demands needs to be met, and these demands are not necessarily located in any free trade zones or first-tier cities. That's how I prefer to call them challenge owners. That's also our job here from the EU SME Center. We identify challenge owners, sector-driven ones. If there is a challenge, a problem that needs to be solved, then of course the demands needs to be met, and there's where opportunities for SMEs are. If that also answers part of your questions. Ben, do you have anything to add from your end?
Well, just to say that, yeah, it's there's, I suppose, for a country as large as vast in China, unfortunately, there's never going to be one magic bullet for all of those. But yeah, certainly with the companies that we do work with at CBBC, regardless of which sector it is in, we always stress to them, as William Spears said earlier there as well, they perhaps get a little fixated on ideas of certain zones or certain parts of China, and it is important for anyone looking to enter China to sort of drop those fixations as early as possible, drop those misunderstandings as early as possible.
Thank you, Ben. Also, thank you, Mr. Spears, for your question. Do we have any more questions from the audience? Yes, please, Esther.
Yes, I guess that my question to the speakers would go a bit the other way around, and instead of focusing on the business side, my question would be,
let's say you are in a meeting with local governments or kind of management of free trade zones. For second, third tier cities, what would be your recommendation in order to help them attract foreign investment? Would it be focusing on improving, for instance, regulatory environment? And for free trade zones, I guess that it would be a similar question, but more focused on what competitive advantages, and by competitive advantages, I mean horizontally, because obviously there are sector-specific issues, could help them differentiate themselves. Because as business organizations, we encounter many times situations where we meet with certain free trade zones, and they all seem to offer the same. So again, what would be your advice or your wish list, if I may put it this way?
Right now, obviously, if anyone who's been in China, there's a lot of bilateral zones around. So within these large economic and development zones, there are Sino-American, Sino-European zones. Obviously, we're working at the China-Britain Business Council, and there's only, I believe, 3 China-UK different zones. So we're trying to encourage local governments to establish industry-focused bilateral zones. That way, they can create a business environment where they're working not only with businesses, but with local universities, research centers, and to set up an entire supply chain that falls into certain industries, and create a cutting edge competitiveness compared with first tier cities, where it's where a lot of the foreign companies come to China tend to set up. So that's what we're working on, and basically, business coming to China, they're looking for clients, looking for business. It's how to support these businesses to find clients. I think that matters the most, rather than the policies and the incentives, because you need to be generating revenue to get those tax rebates anyway. So that's what I would recommend.
Yeah, I would say, I think zones, well, actually, I had turned the question around a little bit, and I think there's a lot of zones that do offer benefit to companies. And I think companies need to better understand what zones are offering, and better understand what types of benefits they can get from zones. So if I think, given the number of zones that are around, if a company is looking for specific incentives or something like that, there's likely a zone out there for them. So I would say maybe my recommendation for zones would be being a little bit more clear about their incentives, and also their specialization, what they're looking to focus on, and the types of investment that they're looking to attract. And oftentimes they're not looking to specifically attract just foreign investment. They're looking to attract investment, say, in a specific sector or in a specific industry. By better promoting that locally, but also for foreign investors, I think that will really help investors know what their options are. So I would kind of turn that around. Sorry.
Anything to add, Ben?
I suppose I would just, to pick up from what the lady said in the question there. She originally said that it may appear as though all of the zones are somewhat similar in what they are offering. And as Kyle noted in his presentation, and as we did in ours, it is important to remember that what you have on paper, what a zone offers, doesn't necessarily completely reflect the reality. Sometimes what they're offering is not entirely clearly written down. There may be some scope for discussion with them. So it's always worth raising these, what you're looking for with zones.
Thank you to all the speakers. I hope this answers your question. Do we have more questions from the audience, please? If in all cases you will not let us know about your questions, after the working group meeting, you are always welcome to contact us further. My colleague Susanna, who is the contact person of this event, you can find her contact information on the event page. You are always welcome to contact us further at the European Chamber and at the EU SME Center. If we do not have any questions any further, I would like to thank again for our speakers for today, Carl Freeman from the Associates, as well as my colleagues from CBBC, Mark Xu and Ben Rotterdam. And thank you very much to all of you for attending the working group meeting of today's. As I mentioned in my opening from the EU SME Center, we are going to follow up continuously on this subject. There will be other information, including publications, including other webinar series, focusing on the topic and related topics. Please stay in touch with us and follow our upcoming events and activities. Thank you very much to all of you.
Thank you. Thank you.